We own about 875,000 ETH. I do 100% think that Ethereum is underpriced right now. I generally try to avoid giving price targets, mostly because I don't think you should trust the price target of someone that owns 875,000 ETH.
Sharplink is set to join the Russell indexes. And so in this conversation, Matthew explains why Ethereum Treasury companies are a real Wall Street trade, not just another crypto bubble. Hello everyone, we are still here at ETHConf and I am joined by Matthew Sheffield, the CIO at Sharplink. Treasury companies, they've come under a bit of fire lately, and that's not really Ethereum Treasury companies. I mean, the two biggest, obviously, you're one of those. I don't feel like you guys have really come under fire for anything other than losses on paper, but Michael Saylor has come under a lot of fire lately, and Bitcoin Treasury companies have come. Do you suffer any ill effects of that? And are there any misconceptions that you see all the time with Sharplink, where people don't quite understand what it is you guys are doing?
Yes, there are a lot of, I would say, misconceptions about the digital asset treasury space as a result of some of the other treasuries that launched. I would say it's less about Saylor. I think what he's actually done is incredible because he pioneered putting crypto onto a public market balance sheet. Bitcoin, not inherently productive. Financialized yield is the way that you can generate Bitcoin per share. So the things he's done with the preferreds, converts, and financial innovation have actually pushed the space forward a lot. What we saw last year in 2025, though, was 150 to 200 companies raise money to put crypto on their public balance sheet. And most of them did not have a well thought out plan. And as a result, there's been a bit of a least common denominator effect. I would say that people associate DATs with whatever has most recently happened in the DAT universe. So when someone goes out there and does something that's ill-conceived, we immediately get messaged. Are you guys going to do the same thing? Sharplink has a very specific thesis on the Ethereum opportunity. We have a very specific thesis about how we should grow ETH per share. We talk about dilution and how we don't ever issue when we're trading below an MNAV of 1 off of our ATM, which is the typical way that people raise equity capital in one of these treasuries. Like, we're very precise with it, but that doesn't mean that these other 199 people who are out there don't sometimes have knock-on effects. That being said, it has created an industry that previously didn't even have a term for it. This term DAT only got created last year because so many of us raised money. And there are a few that I really do look up to who are doing very interesting things. Some of them are going really far out the risk reward curve and are doing things that you probably can't do yet in a full institutional grade, but they're running a smaller treasury. And so they're trying to do things like further out. You've got other people who are deciding they're going to go down the financialization route, and they're pursuing it, I think, in a high quality way. And then you've got some people who are trying these things and are not doing it in a very good way. So to answer your question, yeah, like, I think a lot of people do associate us with the other actions of treasuries. That being said, in the grand scheme of things, it's better that there's an industry surrounding this than not. And we're excited to kind of work with some of the other treasuries through time to maybe add some standards to things and over time kind of build this up.
When it comes to treasuries, I've always been a little conflicted. In the early days, I don't think I really understood treasury companies. What is the benefit of holding Ethereum as a treasury asset?
So I'll also say it quietly, but I'm also a Bitcoiner in some respects. So I do believe that this asset class is largely defined by Bitcoin as digital gold, the pioneering standard of that, a store of value, and then Ethereum, where you can actually bring productivity on chain and derive security. It's global technology. Civilization grade technology is what Joe Lubin says. And that's where the Sharplink thesis really begins. So there's a few ways to break it down. There's one, why Ethereum in general, regardless of the Sharplink or not side of things. And we think that Ethereum specifically is at the precipice of like this massive turning point in capital markets. You have tokenization happening at an incredible rate. You have real world assets ultimately going to be what I think is the largest catalyst for the large banks to come on chain. But stablecoins is a great first foray because it gives them an opportunity to lower their transaction costs. There's a little bit of a lower, let's say, like barrier to entry in that space. And then eventually I think you get all the way to the agentic side of things. So the Ethereum opportunity is something I could talk to you about for hours, and it's one of our passions to do so. That's part of the reason why I'm here at this conference. Sharplink and how a treasury works, I think the more important conversation point, and that's why put it into a public company. So there's a few reasons. One, because we're extremely bullish on Ethereum. We think that our treasury, rather than trying to make as much USD, should be trying to make as much ETH per share because we think that will be worth the most USD. We add that additional thesis to the treasury component of it. And that's why we hold almost everything that we have in ETH. We have around 875,000 ETH. The second thing is, how do you make it productive? Holding ETH, throwing it in a safe, doesn't work the same way that it works well for Bitcoin, right? Like Bitcoin not being a productive asset as digital gold can go be stored 11 stories underground in an Ocean 11 style bunker, and there's no opportunity cost. Ethereum should be made productive. That's one of its greatest values. So we are making it productive. We're trying to generate additional ETH per share via native productivity on-chain. We're staking to help secure the network. We're restaking and doing on-chain deployments to help early-stage protocols get out of that old start problem. We're doing off-chain investments to try to help newer protocols that maybe aren't yet fully deployed and up to speed get that initial cold start capital so they can hit escape velocity. And then we're doing it all in this like publicly audited wrapper where you have a big four auditing firm able to give you the verifications you need to know that it's happening safely, but you have the liquidity of a public equity. And that's why we think it's a good wrapper. Like there's plenty of ways to get exposure to ETH. We want to be the best way to get exposure to ETH through time. And that's why we do it as a treasury. And then the Ethereum opportunity is why ETH.
How much do you focus on price? Not from a buying perspective, because presumably when the price goes down, that's an opportunity.
It's a great question. We definitely care about price, right? Like at the end of the day, our thesis is that holding Ethereum as a treasury asset is the best way to create shareholder value. And the way that the market measures shareholder value through time is still dollar denominated. And so at the end of the day, we think that increasing ETH per share through time is the best way for us to capitalize on that Ethereum opportunity thesis. But in the short, medium, and long run, that is my explicit goal. Like if someone doesn't want to be long Ethereum, Sharplink is the worst possible company that you could hold in your portfolio. But if you want to be long Ethereum, my goal is to increase ETH per share through time to get people longer and longer Ethereum. And so price matters a lot from a how much you can accumulate perspective. There's a lot of levers at play there. It's how much you can accumulate with funds raised in what way. Was it accretive or dilutive? Once you're able to do that, you can go and add in the ETH per share side of things. You can go say, okay, great. Can I increase ETH per share here? Or would I simply lower my weighted average, but actually decrease ETH per share by taking this action? Doing the latter just reduces that headline that we like to see covered in the media a lot, but it doesn't actually increase shareholder value. So sometimes we do things that are, I think, publicly perceived as maybe not optimizing for that headline P&L figure, because it's all about the shareholder P&L on a share basis, not the headline company's P&L. It's why our goal is never to be the largest treasury. Like we could 10x our treasury holdings, but if we didn't increase ETH per share in that period of time, how would someone holding Sharplink stock benefit? So I think by keeping that common North Star, just increase ETH per share kind of through time, it's the best way to ensure that you don't deviate from the course and make short-term decisions that don't make sense.
The ecosystem around Ethereum is complicated and huge now and growing really quickly, which is a positive. But we've also seen some turbulence recently. And most recently, it's the restructuring of the Ethereum Foundation. How much do things like that factor into what you're doing? Because you're so deep into Ethereum now, obviously. That's the bet you make. Do these sorts of news items concern you? Do you think about them much?
So we think about it all the time, but I don't think that it is a deviation from the EF's stated goal. It's simply that there's an emergence of room for new actors in the space. The EF has always been focused on building the protocol layer and thinking in 5 or 10 year timelines, right? They're trying to build civilization grade technology. Today, we are benefiting from the fact that they had foresight 5 or 10 years ago to think about these problems. Tomorrow, we will benefit from the fact that they continue to do what is best for the protocol through time and that they don't necessarily succumb to short-term pressures. They build technology. Now, in come the DATs, and specifically Sharplink, I think we're well situated because we have a slightly different goal. Our goal is to be benevolent capitalists, effectively. Increase our ETH per share by doing profitable things denominated in Ethereum, but also be good for the Ethereum ecosystem through time because growing ETH is also good for us. We own about 875,000 ETH. So there's a very interesting place that I think the DATs can live, which is doing things that are good, but also profitable, that maybe a foundation was never designed to do in the first place. And you can actually live in a really nice balanced world where both of those parties do their thing the best they can with different shareholders and different alignment.
Presumably, from an investment standpoint, you think that Ethereum's current price is undervalued. I think that's likely that you're going to say yes to that. So my question is, Where do you think realistically it should be right now, price-wise? And what are you imagining we're going to see?
I do 100% think that Ethereum is underpriced right now. I will also say that I generally try to avoid giving price targets, mostly because I don't think you should trust the price target of someone that owns 875,000 ETH for ETH. Like it seems like I'd be trying to grab a headline saying the highest number that I could. And that's not really what we want to do. Like we really want to be an advocate for the space through time and do smart institutional grade things. So I apologize that I'm going to probably duck out of answering the price target. But what I can say is that the market is not going to maintain a perfect fair value for Ethereum through time because it's inefficient. And because it's inefficient is why we think we are so early and there's so much upside opportunity. Like the market will be in overbought or oversold territory relative to fair market value regularly along the way for an early adopter asset. The less we play ping pong between those lower and upper bounds through time, the lower the volatility of the asset becomes, the more of an established asset class we are. There's a little bit less fun happening on the trader side of things, a little bit more security happening for institutional investors who maybe aren't seeking that vol. So you're sacrificing one thing for the other. Like if you want to have these large bull runs that we still see in our future, then you have to accept the downside volatility. And eventually we will become an asset that probably trades similar in volatility to the Nasdaq. There will be less euphoria during the good times. There'll be less drawdowns during the bad times. And that will mean that we are probably in the kind of holistically rolled out, we've reached equilibrium side of the market. We are going to come out with more and more valuation frameworks that we think make sense. I probably won't go into it too much here, but I think there are ways that you can look at a network's value and say, in the future, what would a marginal dollar of inflows look like, both for price as well as for attracting another dollar thereafter? And that's a conversation I look forward to kind of having at the community level.
What narratives in Ethereum right now have caught your eye and you think are perhaps underappreciated?
So I think it's a combination of the narratives that people talk about, but the way that they're actually going to get used. So if you take agentic finance and you say 5 years from now, where are we going to be? It's probably doing things that you're not comfortable doing yourself. Whereas right now, I don't know anyone using agents for things that they aren't actually diligencing themselves, because you can't trust your agents well enough if you don't know the thing you're asking it to do. So right now, people are basically using it as an extension of themselves. Eventually, you're going to use it for things you're not good at to do it better than you. Where that ties into agentic finance is that there's a small portion of people who specialize in trading, investment management, et cetera. And there's a lot of knowledge that you accumulate over time on the job. And that's kind of how it's passed on. It's very much in no one's incentive to write a book explaining how to do all these things, right? Like people build their entire careers off of it. You go and say, great, we're going to enter into a world where agents can be rented. Someone that creates a very tailored one can go and monetize it. You add that to stablecoin payment rails. You add that tokenization of RWAs and actually making the RWA more valuable on chain, not simply grabbing the headline of, okay, great, I traded this stock on chain. That's really interesting. Let me go and publish about it. It's like, no, I got better liquidity on my borrow on chain, or I got paid more to lend out my stock on chain. Like I actually made more money. Those three things coalesce in people basically having an investment advisor in their pocket, one that they can trust without having to know how to do it themselves. Ethereum's network value is always the thing that we tout as one of its biggest advantages. Like the majority of liquidity settles on Ethereum. It derives its security there. If agentic finance can bring that wave of investment managers on chain, basically trading your entire RWA stack for you and doing it in a way where you actually can trust the outcome is better than what you are accomplishing in your own brokerage account today, that is a huge opportunity, because at the end of the day, I think people love talking about tech headlines as like early adopters, but people like making money more. And so when you can go and tell someone how much money they're going to make off of an advancement instead of just how interesting it'll be and how good for the science world or how good for the technology community it is, that's where you attract them on. Like, how much money can I make from this thing? You need to trust the agents, you need to build the rails, and then you need to give someone the ability to make more than they're currently making. And that's where you can 10, 100, 10,000x the amount of users. Like, show them the money.
Matt, thank you so much for joining us.
Appreciate you having me.
Thanks.